Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. All right, hello and welcome to Camel Finance. I'm your boy Camel and I've got with me today Brett from Moonstream. So Brett, how are you doing? Thank you for being here, brother.
Hey, I'm doing great. Thanks so much. Big fan of the show and so glad to be here.
Awesome. And I believe you've got quite an interesting lineup to run through today. So I'm looking forward to seeing that.
Yeah, we do. I'll kind of pull it up a little bit, but lots of good stuff here to share with everybody. So I'm excited. I was working on it late last night, and one of which is a kind of a unique discovery with your camel indicator, which I think is great, and some overlaps on something else we're playing around with. And then I'll get into some fun stuff at the end. Definitely stick around. Some of the very interesting study toward the end. I dusted off and potentially showing where the next bear market low can be. So that'll be fun.
Awesome. Looking forward to it. Before we get into this, do you want to give people a quick overview of your background in case anyone's unfamiliar with you?
Yeah, sure. Thanks. So in 2003, I started a kitchen table business and teaching option traders and Forex traders down in Florida. And we grew that, we taught tens of thousands of investors around the world. I wasn't really the expert. I was bringing in experts and got out of the whole financial publishing business in 2013 when I sold the company. But always loved trading. I was a self-taught trader way back when I had a retail business and always loved it. I always had an eye for patterns. So when one of my old partners called me up in Jan of 2021, said, "What do you have going on?" COVID had sort of grounded my last business. And I said, "I've got nothing." He said, I need you in this crypto thing. And my co-founder, Mike, we just, I immersed in it and all the old sort of skills came back. But I finally found, I think I finally found in life what I love to do and I'm a little bit good at, but and maybe I did buy my first Bitcoin at $20 back in 2013, but maybe I'll tell that story later. It was on the condition I used it to pay for drinks and appetizers. So that was my $100,000 happy hour.
Oh wow. Can I hear that story now, please? I'd love to hear that.
Yeah, sure. Well, I was driving up to Orlando once for a venture fast pitch. I was going to pitch I was building a software sort of project. Hit traffic, got there late, wound up talking to the founder of BitPay, Tony Gallipoli, and he said, I said, "What is this Bitcoin thing?" I had actually heard about it before, but he offered to tell me more if I drove back up next weekend. So I drove back up on a Friday, 3 hours there, and sat in a restaurant with him. It was one of his early clients, and he said, "Give me your wallet and give me $20." And so I handed over the $20 and my wallet, or my phone rather, and he downloaded the Bitcoin onto my phone. But the agreement was so that he could show me how his technology worked, and we actually used that Bitcoin to pay for 2 beers, some nachos, and chicken wings. I think, if I can remember correctly. On a rudimentary Bitcoin payment box. So when I finally built that software, I was the first sort of guy that integrated Bitcoin as a payment product, but it was way too early, 2013. But yeah.
Wow, that's super cool. So did you get into hodling and trading it right away, or was that something you came back and revisited later in life?
Yeah, I think like many of us, we just said, "Hey, let me see how this thing goes. Sounds interesting, but I'll keep an eye on it." And I actually was invited down to St. Martin for a Bitcoin kind of mastermind, crypto mastermind in 2014. Same thing, learned about it, all this stuff. Didn't really get into it until 2018, and I was trading it back then with the old skills that I'd had and doing very poorly. A lot of the indicators that everybody uses, RSIs, things like that, don't really work that well because everybody uses them. And I put everything away. I just said, I'm not doing well with this. And it was maybe my best trade ever because I forgot I had some Ethereum and then went back into 2021. Of course, it had gone up quite a bit. And that's when I really dove in and put in my 10,000 hours more and just sort of immersed in all of it. But I did want to say really refreshing to find your channel. There's a lot of stuff out there. I ignore most of it, but right away I recognize that you're one of the few good ones, and it's always entertaining. So yeah, good stuff. Glad to be here.
Awesome, thank you very much. I appreciate that. Do you want to what are you going to kick things off with? I forgot.
Yeah, well, I mean, a little quick outline for people. Let's see. We're going to go less than an hour. I'm going to go overall forecasts, M2 and global liquidity, past to 150K. I was glad to see your video today. I've been sort of forecasting 150 and potentially 200K for a while, and so I think that's a good number. We'll go Bitcoin dominance, total market cap, Dixie, another couple of interesting studies. It'll go pretty quick, and so yeah, and that's it. pretty much start with the overall and what happens next for Bitcoin. So everyone's asking, and it's kind of an interesting question because it could go either way here, I think.
Yeah, for
So
sure, for sure. Okay, well, excuse me, choking.
yeah.
Yeah, for sure. So yeah, let's dive straight in and we'll see what we got.
Awesome. All right, guys. Well, I guess we'll buckle in and move fast. A lot to cover, and I think you'll enjoy it. Some really interesting things here. So basically, and I really tried not to have too many lines and squiggles and things all over. Although I'm a big fan of the squiggle as well. And I tend to stick with simple indicators. I'm nothing against Elliott Wave, and but I just don't get into it. I did find your guest with the GAN fan fascinating, but there's a certain analysis paralysis if you have too many things going on in the looking at charts, and we've all seen them. So basically, we've got some EMAs. You can relate. Um, and on the chart here, I like parallel trend channels. So I've got two paths here for Bitcoin, and this potentially is a bull flag. And actually, there's two of them, and the measured move on both of them is incidentally 150K. So there's a lot of confluence around that 150K level. And so if we get up there, I'll certainly be taking a bunch of profit off the table and looking for a pullback. But we've got to get started here. We're running out of time. This scenario one I had drawn last week as a quick break above. We like to see I had it drawn like this, and I guess we could still do it that way. Break above the trend channel and then retest is usually what we want to see for the next push higher, and holding at that support level around 107K. I won't be fully bullish till we're above 112 and on a closing basis. And Bitcoin will usually break and retest, but not always. Like it has just rocketed through these and pulled a Solana. If you remember back in 2021, I actually had recommended it about $35, and we took profits early, waiting for the pullback that never came. So lesson learned. So anyway, we're waiting for that. I do think we push higher from here. There's the 21-day exponential moving average. I really like the 21 and 50. The analogy as I give it as, I'll just turn these green blocks off, is kind of like the ice. If you're out on a lake, you want to be on the ice, obviously, and you'd rather have it be thick ice and not thin ice. So the yellow line is the thin ice, the 21-day, and it sort of semi supports price. The green line, the 50-day EMA, is and also works on the weekly. It's more of that thick ice. You can see it holds price a lot better. And when we lose that, typically you're down on your drowning for a while. Here's an example. Lost to 21, fell under the ice. Then we fell below the thick ice, came up, tried to put its head up again, didn't work, and then drowning. So it's just kind of a good way for people that are new to this. So keep it in mind. The blue line is a 200 SMA. That's kind of a longer term. I guess we don't really need that for this example. If we can't hold here though, and we do break down below this kind of 107 line and the 21-day, there's lots of support. There's this support. There's the 50-day. I think if we lose that, then we could still see another 100K retest, but I don't think so, based on what we're going to get into with M2. And also, one of the things we did is kind of interesting indicator that we coded. The green blocks, we visualized the limit buy orders and sell orders on the exchanges. It's actually public information, but visually as humans, we can't really make any sense of it. But a lot of times, price will come down to those mid-levels, mid-sections, as we saw on this dump, came right down here to 98.7. And again, these are concentrations of limit buy orders on the books. And so great places to put limit buy orders if we feel like we're going to drop down. And there was a lot going on this week. And I think Iran and Israel were shooting missiles at each other still. So I don't know that we were looking at that area. Some people bought in. Here's another cool trick that I've noticed over the years too. These large moves, large candles, some people call them vector candles, some people call them fair value gaps. But I've noticed over the years, a lot of times price will be magnetized to come back to that midpoint. So I think these buy limit orders were sort of falling along the lines of that. And I think it has to do with the CME that can kind of have unrealized gains or losses forever and ever, like the banks, and then come back and bring price down, and that way it isn't a loss from taking the other side of the trade. Who really knows? But it's amazing how it came back down to that midpoint and then rocketed up. So while I'm watching that, a couple other things. We have some indicators that we created. I'll maybe talk a little bit about that later. But one of them is kind of bearish though. When this one goes red below 80, I'm leery of that. But it has bounced out of that range before. So we're watching that, and I was buying Bitcoin last night just to kind of not miss out on the traders, the 1 hour, 4 hour, and we had an oscillation down in this range, came out of here. So I was buying Bitcoin just a little bit. I think there's still a chance we come down. DCA is the name of the game, but on the 1 hour, lots of sell pressure. These are all limit sell orders right up here in that 110K region. So got a little bit of work to do. It's not an easy shot, and the longer we kind of sit around here, it's getting a little long in the tooth here for getting to the next phase. So I don't know what are your thoughts on where we go from here, and then I'll show you the bull flag.
As a cycle trader, obviously the main thing I focus on is the timing cycles. And the way I'm looking at it at the moment is we've got a small hope from a cycle perspective of going straight up from here. But with every day that we don't move to new highs, we're kind of working our way through that 60-day cycle. And the further through that 60-day cycle we go, the more probabilistic it comes that we're going to have to go and find another cycle low before we can move higher. So I think we're probably getting towards that neighborhood in the next week or two, where if we haven't broken above new highs, I would say that with somewhere in the 70 to 80% probability neighborhood, we've got to go and find a low into early August first. And then I would expect us to finally make that run to 150K.
Okay, yeah. Pulled up a cleaner chart here and put on the camel indicator, which is great. I love it, by the way. Uh, So let's see, just jumping back though, on that chart, I've got a number of different ways to look at it. So, and I'll go back and show those two bull flags a little bit more carefully. But, we had also a head and shoulders here that technically broke the neckline for a little bit. And so the measured move on that also kind of put us down in the next sell block down in this range. But then we recovered. So that's kind of unusual. That became sort of a downtrending trend line, parallel trend line. I think if we can hold this though and get a nice break up, retest, and then go, that would be ideal. I'm leaning towards that. My spidey sense is saying that's probably what happens. But in terms of the bull flag, there's two of them. And remember this long one that took forever back here. And when we hit that all-time high around 110 for a while, measure move on that flagpole to the top. I had redrawn this here. It's a little bit janky, but here to here, that puts us right up around 150K. And then the most recent bull flag here, similarly, as I think I didn't draw that. I drew one over the other is what I did there. So then the flagpole on this one, just so I don't confuse everybody. Swing low, that's the high there, and then from here out of here, also 150. So it's really interesting. Lots of confluence around that 150K level. So looking at the global M2 and Bitcoin, everyone's been following this. This is with a 12-week delay. I had it at 70 days and it was kind of working. And then I put it on 84 and it was more working, but now it's just deviating from that. And so I don't know, really what's going on here. I think certainly some of this was the Iran-Israel fears, war fears. Who knows? We don't want to see this roll over because deviating from M2 would be bad. And I saw your video on how you talked about everyone saying M2, and it doesn't always follow that. So it's worth noting it's not 100%, but hoping that we see some follow through on that and either push up and kind of get going here sooner than later. Because like you said, if we don't get going soon, it's kind of trouble. So anyway.
I still don't know exactly how I feel about this M2 chart, to be completely honest with you. I mean, undeniably, when I look at the chart you've got on screen, the M2 overlay, it seems like Bitcoin follows M2, or M2 leads Bitcoin higher. Certainly seems compelling, but there are times, granted you kind of have to cherry pick them, but there are times when Bitcoin and M2 move totally opposite directions for up to 10, 11, 12 months at a time. And so I'm just not 100% convinced that this chart is as useful as some people think it is. I'm still kind of open to it, but I think I haven't really made my mind up. Certainly when it's zoomed in like this, I think it looks very compelling. And it also makes sense, right? It makes sense that Bitcoin is like a black hole for liquidity. And when liquidity is going up, you've got the hardest money on the planet. It's obviously going to want to follow that higher. So I think it makes sense, but something about it doesn't sit right with me. You mentioned spidey senses earlier. It kind of just sets off my spidey senses a little bit. And I still haven't really been able to figure out exactly why that is.
Sure. Yeah, totally understand. And just put it back to 70 for 10 weeks, and based on this, it was following pretty closely, and then it has completely deviated. So I do have another look at this, so it's a little different chart here. There's a lot going on, and forgive me for all of the visuals here. I won't go through all of it, but basically, these are all the different central banks, and what I'll just talk about here at the bottom of these liquidity cycles. This dotted line is the liquidity cycle, and as a cycle trader, I'm sure you can kind of appreciate these. They're pretty closely, they're not exact, but each time liquidity bottoms out is usually when Bitcoin starts to rally and breaks new highs. So we saw it back down in here, broke new all-time highs up to there in that green crescent. Here again back in 2020. And so that's been pretty consistent. And so liquidity bottomed right here around August of 2024, arguably. And so then we saw the liquidity in the different central banks spike up. That's these right here. And if I pull up the settings here, you can see these are inversely related. So other is just all those other countries. We've got a Bank of England down here in purple, People's Bank of China, Bank of Japan, and then European Central Bank, and of course the Fed. And so invariably these spiked, but then they came down again, and they've been going up again. So it's sort of, again, not necessarily causal, but interesting to follow. And then these liquidity cycle tops are generally around 46 bars, or about 1,400 days from peak to peak. And I know there's a lot to unpack here, so I won't go into all of it, but kind of interesting. We're still on track. And I had to extend this out here, just guessing, but that puts us into around December of 25. I'm kind of leaning, it is musical chairs. So since we hit all-time high 2 months early before the halving, you have to assume that people are going to be trying to get out early and not be around holding the bag. But I guess anything can happen, and new information equals new decision. So we'll see. We'll follow that along. And just to jump ahead, though, I wanted to touch on this. This is a pretty interesting study that I've been following and created about 2 years ago, forecasting 100K, 150, and 200K, and pretty simple from the last cycle on a logarithmic chart for the Fibonacci from the the swing high in December of 17 down to that low, extended out, called the exact top in Bitcoin at the 3.618. Of course, it had nothing to do with the Bitcoin price. When we look at total market cap, it's when total market cap hit $3 trillion, almost to the dollar. I guess it just triggered programmatic selling across the board. But these Fibonacci is pretty interesting. Doesn't mean they happen again, but that exact same study. And by the way, if you're wondering, I think this was the high. If you follow Wyckoff patterns, this was kind of that upthrust after distribution. So here nor there, pretty close. Drawing the same kind of a study, though, from the high here to the low around 16.5 extended out, we had the 1.618 at 100K, which we hit then. That was kind of a real tough one to get past, of course. And we came down. The blue line, incidentally, is this pattern just massaged a bit for the logarithmic chart. So that's where I got that. And I'll just put that back. And let's see, where do I do? Control Z there. So it doesn't mean it has to happen the same way. Kind of a good pattern. I know you're not a big fan of fractals. They're usually never the same, but just in case this does kind of play out, I have massaged it on that fourth and final angle that has been put in. And so that's why I think we can push to 150K. It's the 2.618 Fibonacci, that next level on this, and probably throw over a little bit to 160, 170, maybe get that 15, 20% pullback to that line. And of course, nothing works perfectly, but if we can sell right in that range and then buy back here with some of the house's money and ride it up to 200K, and the timeline on that. So the 150K looking at around end of August or into August, which sort of fits the narratives that I think many people are talking about. And then that pullback maybe into the September, and then they run it into the end of the year to November. So, again, not married to the outcome, but that would certainly be a fun outcome if that plays out.
That absolutely perfectly would fit the weekly cycles as well, so that we get the top for that 150 plus K decline into a weekly cycle low, one final blow off move into the end of the year. And yeah, that would be, from a cycle perspective, it would be nice and easy to deal with. I mean, nothing's ever easy in markets, of course, but it would make a lot of sense. So I really hope that's what we get. This is exactly the setup I'm cheering on. So yeah, we'll see.
Nice. Awesome. And just a reminder, guys, look how hard it was to break 100K. Some of the talking heads are talking about 300, 400, 500K million this year. I don't think so. Be careful of the hype cycle. Last cycle, when everyone started raising their estimates, that's when we should have been buckling in and taking profits. Uh, real quick, too, these are the 11 reasons that I think we could get there. I'll just skim through them, but this is something we started with 7 reasons, but it's worth reviewing. And the green check marks are ones that have happened and or in the process of happening. So BlackRock, Fidelity, ETFs coming in. We know that happened. That's been a huge push. BTF, the Bank Term Funding Program ending. We thought that that would be after bank failures and they do some kind of silent liquidity and push money to Bitcoin. That didn't happen, but there may be another string of bank failures on the way. Who knows? The Fed may be doing some stealth QE. Hard to say. Sometimes we don't know until after the fact. I have here creative financing and QE to pay down the U.S. debt. We have that 7 trillion to refinance this year, and since there's not a lot of buyers out there, that's why stable coins are being pushed through the Genius Act, etc., because they're the biggest buyers of treasuries, and of course Tether, one of the biggest owners of that. So maybe that is sort of part of the plan and helping to pay down our debt, at least refinancing it before they kind of raise interest rates. I don't know. That's Camel's department. I'm not much of a macro person. The de-dollarization and hyperinflation, the BRICS nations, that's kind of smoldering. And when I first started labeling these, I'm like, each one is like a small smoldering campfire. And if any or all of them ignite each other, you lived in San Diego for a while, it would be like a forest fire. It's really hard to put out, but in a good way for us. So we'll see. BRICS nations kind of still in the wings. I have a question mark on that. But the rest of these have been playing out. Corporate FOMO, MicroStrategy, Tesla, Apple, BlackRock. I think you're going to see more people with Bitcoin on their K1s, and we're starting to see more becoming strategic reserve, or what's the term where they become a Bitcoin reserve
Treasury.
meaning? Yeah, that's it. So it's FOMO there. U.S. country adoption as a reserve currency. I was at the Bitcoin conference, and the guy from Panama, Panama City, not Florida, the Panama one, was saying they're likely going to be next, and that not just to become like El Salvador, they're seeing it as a region, an economic development region, if many of the South American countries there all get in. So that would be interesting. So and then the post having reduced mining supply, and that's something Saylor talked about, and I hadn't realized, but it makes sense. After the halving, twice as hard to mine Bitcoin, hence half as many are available, and that's less available to sell. I think there was 12 billion available every year. That would be cut in half. We haven't really seen a lot of the supply, the next one, less available exchange supply. I have a question mark and a check, because there has to be dwindling supply, but we haven't really seen the demand surge in the spot market, arguably because Michael Strategy, I'm just, I started calling him Michael Saylor micro strategy, just Michael Strategy. Now it's just strategy. So there you go. But they're buying OTC, so I know maybe you understand that a little bit better as far as why it's not pushing prices up. But anyway, it's a mystery to me. Political support in favor of Bitcoin and crypto, like it or not, the new administration very pro Bitcoin, and that's good. Obviously, Gensler's gone, very pro Bitcoin SEC chair. So all of these are good. It's only a matter of time, it feels like. Number 10, global fiat debt bubble and the commercial real estate crash. That's still in the wings. We printed so much money during COVID. It's still in the system, and I don't know how they're going to get rid of it, but that's a problem. And people are agreeing that it's unsustainable. But also, Tom Lee was on an interesting video the other day. He's like, "Look, we've known for 30 years that it's unsustainable, and it's just going to have to keep going." But I don't know. We'll see. Commercial real estate crash. That's one I'm a little more worried about. And there's lots of buildings that are empty. My sister and I have some commercial real estate, and it's leased. But I think that's the other shoe that could drop to take down the banks, because they're holding a lot of the paper. And one more, and I'll shut up and let you chime in if you like. Flight to quality pensions. I heard in the UK that they were going to start moving money out of pensions in 401k, sovereign wealth funds. I don't know. What are your thoughts? Did I miss any?
I don't think you missed any. The BTFP thing, I think, will be a big one, but it's kind of, as you said, it's kind of unsure at the moment. It's kind of uncertain. When you were talking about the corporate FOMO and the treasuries, I'm literally seeing those every single day. New companies stepping in. That's really, really, really putting a demand underneath. I know you mentioned the OTC Bitcoin.
I believe the reason that doesn't tend to affect the price too much is because it's almost like a peer-to-peer transaction. So
Yeah.
it's not done through an exchange. With that said, the exchange balances are crashing. And it's kind of a weird question, I think. I get it quite a lot, and I don't even really know how to answer it. But people keep saying, how come if there's no supply left and there's the exchange balances are dwindling and blah, 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 where's the supply shock? But I'm guessing there still has to be Bitcoin that's ready to move hands, right? There's still, if everybody had actually said to themselves, I'm not selling anymore, I'm holding what I've got, then the price would have to move higher to go and find liquidity. And so somewhere, somehow, there is somebody cheating the bags. And I guess we just can't really see the price appreciation until that's finally done. But I do think based on the charts, we're getting closer to that. As for things like the Bitcoin miner supply, that's super interesting because we're going to be half the inflation rate of gold or something, aren't we, at the next halving? So we will well and truly be the absolute most scarce, lowest inflation asset on the planet. That's going to be an incredible moment. That should be conducive, hopefully, to higher prices. And then with the commercial real estate, I see that as well. And like you said, I think you hit the nail on the head with that. The banks are holding a lot of paper, and that may or may not be a problem. It depends how badly the CRE suffers, I guess. But I would think, historically at least, any kind of bank failure or stress on the banking system has only put a bid underneath Bitcoin. And then finally, as for the pensions, I wasn't really sure what you were referring to in the UK. Could you elaborate on that bit for me, please?
I had heard that one pension in the UK was talking about moving into Bitcoin to fund their future pension, and I forgot where I heard that, but thought maybe you're closer to home, so you might have heard that. But I haven't heard anything more about it, so maybe that hasn't quite kicked up yet.
Oh, I haven't heard about that. I've completely missed that. So I'll look into that after this conversation. That'll be an interesting thing to cover later in the week.
Yeah, cool. And we'll both go on find AI. I mean, I know in the OTC, it's kind of like the old days of stock certificates when you'd hold the bearer shares. You could sell it to your neighbor for any price you wanted to, even if other people had more different pricing on it. So it is peer to peer, but you'd think at some point there would be arbitrage and it would, but I did hear also that some of the whales were selling, and that's who's selling the 0 to 1,000 people that were holding since 2014, and then later the more recent ones, because I think that makes sense. People, if they rode it all the way up last cycle and they saw their wealth evaporate, and you're a whale, you don't want to ride it back down again. So to take some ships off the table. But if anyone knows, put it, I guess, in the comments, or we'll research it and I'll let you know if I find anything also.
Yeah, for sure.
So cool. All right. Well, we're moving right along. So this is just a monthly chart of Bitcoin and nothing terribly exciting here. What I wanted to show were these, and I might have a bit of a challenge here. That's just kind of funny because I'm also a squiggler. So look at this. I squiggled this one back in January 2023. So I'm here. May challenge you to a squiggle off one of these days here.
Sounds good.
Just for fun. But yeah, back here on the let's see, this is RSI, I think. I had to turn the label off. Yeah, so basically we were back here in 23 at these low levels, and I just kind of swiggled that thing, and obviously not exact, but we're heading up a bit of some resistance here. These are important levels on the RSI. The 72 line has been both support and resistance over time. So you can see that support kind of broke down, became resistance. We got through it. Now it's kind of acting as resistance. So I'll have to see. And that 80 line also kind of important here. But like these are kind of lagging and not predictive. Just curious to look at on the. I don't use a lot of the traditional indicators, but these are pretty good ones. Money flow index, lagging indicator. When it gets down in this zone, usually get a blast off. So we saw that turn around in Jan 23. One of our indicators that I'll tell you about because it's has a really strong correlation with the camel cycles, and I have sort of a dubious speculative theory on that. So I'd love to get your opinion. But we called the bottom here based on our that early reversal indicator, and I didn't know why it worked. It was an accidental discovery, but I think maybe now it might have something to do with cycles, and we didn't realize it. Anyway, stochastics RSI. This is kind of all over the place. Looks better on a 2-month chart. And so we are up in these upper ranges. So there's probably not a whole lot of time left in this bull run, but we could probably squeeze it out a bit farther into this range, and this cycle is different. So just curious to kind of keep an eye on those things and see where they are. And I think that's about it. The MACD I don't really use much on the monthly time frame. It's pretty good though, and that was one of the ways I called. I was telling people to get into cash. Just to get back to the monthly, back in November, even October, I was like, guys, this doesn't seem right. But and then in January when they crossed, though, I was like pounding the table, time to get out. And let's see, June of 18, I went too far there. This is not trying to make things up here, right? About January 22. So right through here was getting overextended. And but we'd have compared to that, we had this nice parabola zigzag high low, and this cycle has really extended itself a ways, so that's good news. This was looking a lot like this, and I'm like, it kind of looks like we're going down and it's over. But anyway, we'll see if that starts rolling over. A good sign that maybe party's starting to end, the music's going to stop. So let's see what else. DXY. I think this might even be your chart. I can't remember where I saw this, but this is kind of a macro chart. Maybe.
Oh yeah, I stole that off of Sven Hendrich, I think.
Okay. Yeah, as made you can see how blurry it is, so I think it's been stolen a few times. But yeah, I saw your video today or yesterday. This rock gets higher, that'd be really interesting. Obviously, assuming it doesn't diverge, we want it to go down, and it's been in this nice kind of downward zigzag. I call it the Bitcoin rally zone, and we're hitting kind of rejection again. I like these parallel trend channels, real simple stuff. Wasn't doing it last cycle. We were drawing trend lines everywhere, and then I was just saw the parallel trend channel. And sometimes it takes a little bit to massage it once you have 2 data points, but they are very accurate. And I'm always looking for when a new trend channel might be forming. With the Dixie, though, probably going to reject here, I would hope. And if it can break down below here, I've got an alert at 95.5. Then we're in Bitcoin super rally zone potentially, and down toward the 3-year cycle low. And I think I've got that right because that goes back to about 2020. Yeah. What are your thoughts? You're into the DXY, and I know you said we could deviate and just could rally higher. And who knows? I don't know. We're watching it. I'm not sure how to read it though, if that happens.
Yeah, I've there's been times I've been extremely good at calling the dollar or the Dixie, and the last few months I've been extremely bad at it. So I'm not sure how much my opinion really carries weight at the moment because I just haven't been able to call it for the last few months. For me, it still seems like we're missing a weekly cycle low and a good counter trend rally. I did a collab with a guy called Sonny, who also had some pretty compelling data to suggest it should get a pop in the not too distant future. So that's still kind of my current lean, although it's been my lean for 3 months. And as I said, I've been flat wrong about that. So I see a lot of people super bearish. But just from a cycle perspective, I'm not really convinced we've seen enough of a relief rally to kind of mark the weekly cycle and then look for lower numbers just yet. So I don't really know. It's been a tough read for me in the last few months. I'm just kind of, it's not something I trade. I just kind of like to track it. Historically, it gave me, I felt a bit of an edge because it was like, well, Dixie down, risk up. But recently we've had extended periods where Dixie up, risk up. So I'm not even sure how useful it is at the moment anyway. But yeah, I mean, that's all I really have to say on the Dixie, to be honest. I don't know is the honest answer. I'm really a little bit confused. And I think unless I can see some kind of big, clear, obvious cycle low and a swing and a reversal, then from that point I think I can say, okay, we got a new cycle, we can reset the counts from here, and then hopefully it should be back to business as usual. But at the moment it seems pretty complex, at least from my strategy perspective.
Yeah, for sure. Yeah, it was working very well on an inverse relationship, and then it just started going up with the Bitcoin all the way up here to the end of the year, and so I was sort of stopped watching it. But okay, that reminds me though, one thing I didn't load up here, but I was maybe want to share, and it's kind of it's on the IBIT, and discovered that like the CME gaps that usually fill, the IBIT 4-hour gaps usually fill, and I haven't looked at that in a little while, so maybe we'll pull it up if we have time. But moving right along, this is kind of interesting here. This is a study. I forget where I saw it, but I recreated it and just kind of made this roadmap here. These bars pattern. This is Bitcoin. Sorry, this is Tether dominance, USDT dominance And this runs inversely with the total market cap in Bitcoin. So as we can see, when the USDT goes up, this is kind of back into September 20. Actually, let's skip ahead to July of 21 when we had that big summer crash. So it makes sense. Money flowing out of total market cap, out of crypto into stable coins, and Tether being the largest one. But this line down below is held since back around Feb 18. And when the Tether dominance comes back to the line, we're typically peaking money out of Tether into the markets, and I'll overlay total market cap so you guys can see that. But here, right about April, May, that's when we started to see money flow out, that midsummer correction, July of 2021, if you remember that, out of nowhere. And then we saw the money come back in, and then we sort of saw that November 20 high, and that's when we started pushing up. And those are those early warning signs that the party was over. So this is just a bars pattern of that. Originally, I had it overlaid like that, but I think we have more time on it. So I think it's going to be more like this. And if that's the case, this trend line here is very important. Not to get into the weeds with these things, they're not really the driving force, but they can give clues. So if we start to lose this trend line and head lower, that means money flowing out of Tether into Bitcoin, into total market cap. Whereas if we push up, then we have more of a correction ahead. So I'm keeping an eye on that. And I've even labeled these zones here: crypto correction zone, crypto crash, and bear market. The timing on these are interesting too, because that kind of flows into where we would expect it to be over December of 2025, kind of the party starting to end, and then crypto crash Jan 26. Some people are saying we'll head into early Q1 2026. I don't know. I'll believe it when I see it. And let's see if I still have the, for some reason, here. Okay, so turn that back on and zoom out. You can see how it's a little janky here when you kind of do the different time frames, but you can kind of see it there. Let's see. So total market cap, there's a good one. So when the total market cap was peaking, Tether was at its lowest, hitting that trend line. Similarly back here. So that yellow line is sort of the median. They kind of attract each other. So at some point we will see that. I just thought it was interesting to follow, and we're keeping an eye on that, because sometimes you can get clues out of these other things before the actual coin and looking at all sides of it. But I don't know. Any thoughts on that?
It's not something I track. I mean, obviously, it makes sense that, like you were saying, if we get flows out of the crypto space into stable coins for defense, then yeah, it makes sense that they move inversely. But it's not a metric I actually track personally.
Yeah, totally understand. Yeah, gotcha. All right, let's see. We'll keep on going, and so that's the end of part one. But let's see. Now we're gonna jump over to part two, if I haven't lost it here, and just so we have a roadmap. Let's see, where did I go with that? And here, so basically, this is where I want to dive into some other topping signals, speed round, and then get into this really interesting study I did with the camel cycle indicator and some other cool things. So let's jump over here. So basically, for calling the top, there's a million different ways to do it. One of the ones I was using last cycle that is pretty good, the pi cycle top. You guys might be familiar with that. It's basically two moving averages. One is an algorithm or a multiple of an moving average. Don't need to get into that. So 2013, we actually had two. And I was kind of speculating we might have two this cycle. At this point, I don't think we will. So when these cross, though, you can see pi cycle top pretty close, not exact, pretty close. It's sort of just touched. And then the last time it just touched, it's getting less and less accurate. And of course, you could pretty much put something in with past data and have something figured out, and doesn't necessarily means it works in the future. But with this, if 200,000 is maybe the top, and we zoom out to a daily here, it's just kind of interesting to project forward and see, where that could be timing wise. December 2025. Again, this is a bars pattern of, I believe I stole that from down somewhere else, maybe like here, and I think that was this one, and then squiggled it down a little bit. But just being careful not to have confirmation bias with any of these, but it kind of fits there. And if that's the case, and we hit 200K around December, which fits the other models that we were looking at, well, then it's reasonable that this line would come up. It's the faster moving average, and right around in there, that fits the model on top of 200K potentially. Anything can happen, as we know, in crypto. So that's kind of cool. This is another one I saw somebody else talk about, and I recreated it. Pretty simple one. It is a 200-week simple moving average. and a little confusing at first, but essentially when the SMA crosses the old high, the blue line crosses the old high, and you go straight up, that's the top. Okay, so we go over here, the SMA crosses the old top here, and we go straight up. That was the top. And so right here, same thing. This was a little bit off. It was a little bit early, a little bit late rather, up into the top. So I don't know, but looking at that again, if we kind of project out and it shoots over when the SMA potentially crosses here, I'd probably more out a little bit, have to extend that out. And if that's where it crosses, if we get a push higher, puts us in, you guessed it, December of 25. So if we're going to hit 200K, I think that's probably around where we'll do it. I'm not so concerned about the price of this right here, I guess, because it could be all the way up here. I don't know. And this is all pure speculation, but kind of fun. If you start seeing confluence in a lot of different studies, that's when I'm kind of paying attention. But
Yeah, for sure.
here,
There's actually a surprising amount of confluence for that kind of 150 to 200K neighborhood, isn't there?
yeah. So we'll see. Should be interesting. Um, cool. So before we get into the other thing, this is one of the other top calls that we had. So without getting into it, these arrows are. This is an indicator we came up with that was an accidental discovery, and originally it was an oscillator that was kind of useless, and we were going to deprecate it. And the reason I'm mentioning this is just there are still things maybe you could figure out by being a good pattern recognition person. Because I noticed when it got down below a certain level and back up above a certain level in a certain time period, it had high correlation of going up to that level. And let me just add it because I somehow erased it off of here. But sorry, I'm trying to do two things at once, and I thought I had it on there. Here, sorry about that. Oscillator. Cool. Just to explain it, because sometimes people say that's cute. You have a red arrow. The actual oh, we did have it on here. So the actual oscillator looks like this, and nobody wants to look at that, obviously. But it was when it came down below and touched 0 or below 3 and got above 20 in 3 time periods. So this was a no, that was a failed rally. This one didn't count because it started from below sort of 5. But these over here, which were at 0, came down above 3 and above 20, did follow through all the way to that top. And similarly on the red side, I'll just zoom out so it's not so painful to look at, and then we'll go back to the arrows. When we got up to around 100 or 97 or above and below 80, it had a high correlation to go down through it. So my partner's a quant engineer and an old hedge fund trader and programmer. So we basically turned it into arrows. And what's interesting is we didn't know why it worked, but when we saw this pattern happen, bearish engulfing, bearish ERI, we called it the early reversal indicator, and then confluence with these other signals, our trend strength momentum indicator, red below 80. And again, I'm not here to talk about these, but just confluence. This is bearish divergence on our RSI Pro. When those aligned, that was the top. And we've seen these patterns a number of times, both on the top and bottom. There's some noise in the middle. That's why we look for confluence on it. But on the weekly time frame, even back here, everyone thought we were going to 100K back here. And I said, guys, our bear market signals are lining up. And sure enough, we had kind of a 20% pullback. And then we had the bullish version of it. On a monthly time frame, kind of cool. It's only fired 4 times in the history of Bitcoin, and that's usually at the bottom. There's one hidden behind in here. The green boxes are money flow, but why I'm mentioning that is I think what it is institutional programmatic buying and selling, because it takes a lot of volume. Retail's not doing that, not on a daily basis, not on a weekly or a monthly. So it takes a certain amount of volume and velocity to move it that much. So that's kind of, I think we're following the footsteps of the elephants. And that's a perfect segue into, I'm really looking forward to run this by you is, so your indicator, love it. And, it's catches all these swing lows and these swing highs. And that's really fascinating. But when I overlaid the ERI on here, it's pretty close. And so your right translated here or your left translated there. These are either a day or two within themselves, which leads me to wonder, is what we're picking up institutional buying and selling because the institutions are using cycle theory? What do you think? Because I don't know.
It's a good question. I don't know either. I don't know.
Yeah, I don't know.
No,
It's a
I don't
mystery.
know.
But also a good segue into. Oh, okay. Never mind. I was going to get to. We're ahead of ourselves. Did you have something else you wanted to add?
No, I'm just scratching. I'm sat here scratching my head because I've never heard of it, but it wouldn't surprise me either. You know, it really wouldn't surprise me. I know there's a guy called Charles Nenner who uses cycles, and he's got like a very it's a very fast moving kind of cycle algorithmic indicator. It's actually too fast for my liking. It makes far too many signals, and I'm not that kind of snappy, sharp trader like that. I prefer to have slower signals and take my time and ride the positions for a bit longer. But I know that that kind of thing does exist. There are various different types of cycles like Hurst, Bresset, whatever else. There's a few others. So it wouldn't surprise me. But it also, when you asked the question, it kind of rocked me a bit because I was just kind of thinking of you get these institutions with all their money and all their funding, and it's kind of funny to think that maybe all they do is count the days like I do, and then wait for a swing low.
Instead of a floor full of PhDs, I've got one guy back in there with a slide rule and just doing the. So who knows? Either way, and if not, though, because I became familiar with cycle theory about a year ago, and from someone that I would like to introduce you to, who's a Hurst cycles guy. But essentially, I thought if we could combine cycle on the timing of it with our ERI, which tends to catch momentum and velocity, that would be the holy grail. Maybe they're looking at the same thing, maybe they're not. But from now on, for sure, going forward, I'll be looking for confluence on these. And so pretty cool. I guess we'll keep an eye on it. So
Yeah, it'd be interesting to see if it continues to persist.
yeah. So anyway, so guys, this is something, and I want to, thank Camel for having me on because I haven't looked at this in probably a year and a half. And there's nothing on the chart yet, so you're not missing anything yet. But I'm going to reveal some things. So I was with one of my students one time, and we were wondering, because we were playing around with that Fibonacci study of projecting the next cycle high. And he asked the question, do you think we can project and predict the next bear market low? And I'm like, interesting question. So we looked at a couple things, and let's just go through it. So basically, let me unlock that and show this. So in the last cycle here, we had, if we use a fib-based extension from this high to low to high, and by the way, if you guys try to recreate this, it's really temperamental. Zooming all the way in, you really have to get it to the bottom top of the candles, or else this thing won't match up at all. But what was really fascinating is that we were playing around with it, and none of the Fibonacci numbers were working, right? And for swing high low to that bottom down December 22 around 16.5, and we just kept plugging in numbers, and you could probably see it by now. Do you know what did work? 3.14.
The pi, that silly pi number.
Right? So looking at the next one, and there's two ways to draw it, by the way, because it's a little janky. High, low, high here. But what about, this high? I did it both ways, and they both came up with pi. So let's see what happens. Now, if we did a fib-based extension on the next one, and I'll turn these off here just so it's not so messy. So from here, the Fibonacci, like we talked about, from the high to the 16.5 low. And incidentally, I had forecast 16.5 as a low back in May. Got a little lucky, but so anyway, that was cool. What if this is the next high, right? We talked about that in the other study. So 2.618, 3.618, 150 to 200. If that's the case, using that trend, the same trend-based extension, which one was it? There. Okay. Swing high, low, and we go to 200K here. Where is the next potential bottom? Now, I don't think this is likely, but it's interesting. 32K. That would not be good. And I can't imagine we come down that low, but but we'll see. I don't know. What do you think? Do you think, because isn't it true the well, I don't know. Do you think we have any shot of coming down that far? That would certainly be a bloodbath. 200K to 32K. Can't imagine.
It's a market. Anything can happen, right? But I think that's too low. And the reason I say that is because something that's been pretty consistent that we've seen in all the prior cycles is whatever the miner floor price is at the time. So that's like the average break-even price across all the miners. We tend to pierce through that level briefly into the major low. And then what we see is a bunch of forced miner capitulation. A bunch of miners close down, the hash rate gets handed over to the most efficient miners, and then the whole thing restarts again. The price quickly and swiftly recovers back above that miner floor price. We get a slight lessening in the decentralization and a slight sort of concentration amongst the most efficient miners. That's just how the business works. And then over time, as Bitcoin creeps back up, more and more miners can plug back in, and then the decentralization of the miners can continue to proliferate thereafter. But that's been a really, really good marker. And we've seen it on every single bear market low. You take whatever that average floor price is, the break-even price, expect it to pierce it by a little bit, few K maybe. So if we do that, last time I checked, and obviously this is a dynamic floor price, like the floor price moves all the time. But last time I checked, and it wasn't that long ago, it was around 70K for your average miner. Excuse me, 75K for your average miner, which would mean I would be looking perhaps for about a 70K bear market low if that average break-even price is 75K. Now, there's a massive discrepancy, which I think is important to note, is that some will be able to actually mine all the way down to 30 or 35K, right? There are some miners around the world that have essentially free electricity. They build these farms in to the sides of mountains, so they stay freezing cold all day long, and they don't have to pay to cool them things down. They really only have to pay one guy in a hard hat to walk around and replace all the bits that have worn out, and that their running costs are, a fraction of what most miners are around the world. But generally speaking, it has been, if you take the average across all of them and expect to pierce it a little bit, that's what makes me think we maybe come back down to only about 70-ish K. And so, with that said, can I get you to pull that fib target up and see how high we would have to go to get that pie retracement to land at about 70K, please, Brett?
Sure, absolutely. And on your point too, though, I heard that Bitcoin's never gone below the price of when a new president came in, and November 5th was right there at 72, 73K. So I'm inclined to agree with you. I don't think we go back down that low, but if we go up, it wouldn't be too much higher, actually. If we go to 242, that's a great question, because then it does work.
That's lower than I thought it was going to be. I thought you were going to have to drag that thing up to like 400 or 500K to make this work. So maybe we can overshoot that 200K target just a little bit.
Interesting. Well, we'll keep an eye on it. I'll keep an eye on it, and maybe we'll revisit that a little bit later, because certainly with everything going on, that's not a far cry. If we get a dip below 200K and then get a massive short squeeze, because everyone's going to short it, maybe that hits. I'm going to set an alert, and we'll have to come back around and see if that worked.
Whilst you're there, Brett, could you do me another favor, please? Can you measure from the top to bottom, or from the top to where that pie retracement is in terms of percentage? So the 240K down to whatever it is, 70-ish K. Can you just measure that in terms of percentage for me, please?
Okay, yeah, like this. 70%. That fits about right.
And it fits that pattern of decreasing vol in the bear markets on the way up, right, as well.
Huh. Well, I got chills, guys. Man, we'll see. Maybe, maybe. All right. Well, to be continued. So it looks like Bitcoin's rallying a bit too. 734. It's up today. So just wrapping things up. So if we want to jump over, and I had kind of coined this because let's see, Camel, in your video the other day, you were talking about it was Crackpipe speculation. So we were just talking about the next market low. That was some dubious speculation. The cool speculation was the Camel and ERI. But so let's do some more Crackpipe speculation, because I love that. It's so solar cycles. I've never heard of that, but we were following the moon phases at one point, and these are not that accurate. But on the swing highs, a lot of times they're pretty close on these moon phases. I don't know if that's a full moon or the which one that is, and The waxing moon and the waning moon. Have you ever followed these?
No, I've had a lot of people speculate that that's what drives the cycles I use, and it could be right. I can't really say for sure that it isn't, but I don't like the hit rate of them particularly, and they're quite well. They are fixed, aren't they? They're a fixed distance, and as you know, probably I assume, of course, you would do. The cycles I use are kind of dynamic, right? They're fluid. They can come slightly early, they can come bang average, or they can come slightly late. So, for that reason, I've found that I have a higher hit rate with my cycles. I don't really think it's the moon. I've heard the theory behind this. The crackpot theory is that the moon is obviously responsible for gravitational pulls on water, like the tides. And since humans are mostly water, then maybe, depending on the state of the moon, depends on our influence and emotion. And thus, it could be the moon driving us to buy or sell. I'm not sure I'm a subscriber to this idea. But yeah, I don't know. What do you think? Do you think they're a driving force, or do you think this is like correlation does not always equal causation?
I think that's what it is. I did get excited when I first overlaid them with your indicator, and my eyes went right here where they lined up perfectly. But then, yeah, I think there's maybe some truth to that as humans, but there's so many other variables. Yeah, I don't think that we can see this doesn't really. Although these three tops here, when we were following it, it was better at calling tops, but it's just if you have too much, it's analysis paralysis, and so I think it's worth you know not keeping an eye on it. That being said, we already talked about that. I think I'm going in the wrong direction here. I wanted to go. Why is it going that way? Here and there and then there and then pi cycle top. Did I miss something? Oh, well, I guess that's it, except for going back to the doc here. So yeah, that was the last chart. But basically, if you're up for it, 5 other random funny correlations, because I got a kick out of your solar spots. So I did a little Googling. Did you know that butter production in Bangladesh also has near perfect correlation with the S&P 500?
I didn't. I didn't know that. No.
They did a decade study on that. The number of Nicolas Cage movies released in a year and the number of people who drowned by falling into a U.S. swimming pool.
Wow. I think I've seen that one before, actually.
And the next two are funny because they lead to something else. The U.S. per person per capita cheese consumption and the deaths by bedsheet tangling. So the more cheese you eat, the more likely you are to die of bedsheet tangling. And also American cheese consumption and BlackRock stock price. So the conclusion is buying BlackRock stock will increase your chances of dying entangled in your bed seats. Not financial advice.
It makes perfect sense, right?
Right. Stranger things have happened. And my favorite, the skirt length theory. It was once believed, this is true, that the stock market performance was linked to the length of women's skirts. A shorter was bullish, longer was for a bear market. So let's hope for a bull market here. And that's all I got. Except for this graphic here of civil engineering doctorates awarded with mozzarella cheese, but not really sure about that one. But anyway, cool. Well, I mean, if you wanted to, I don't know how you're on time. We could jump over and look at some altcoins, but that's not really your bag.
Yeah, go on then. Why not? Why not?
All right,
because my followers aren't going to get it from me, so we'll provide the service. You can show them what you can see.
Well, I mean, the TLDR is, I'm not a big fan of ETH here. Giant cell block in here. It does have a cup and handle pattern forming, possibly. I do like the exponential moving average is turning up higher. It's just these cell blocks have been really kind of impactful in where things turn around. I do want to share one other thing, by the way, because I want to give extra value here. Let me turn this thing off. For Bollinger Bands, you guys have probably heard of Bollinger Bands. They don't really work with crypto, but I was playing around with the settings on them. If you want to make your Bollinger Bands really work better, just change the standard deviation from 2 to 3. And if you do that, it works incredibly well. You can see whenever Bitcoin touches the upper Bollinger Band, that was pretty much the top, and then it reverses. I used to have seminars in Florida, and Steve Nissen was a friend of mine, and he would speak. So I was on a webinar with him once, and he said, did you know typically when they hit one Bollinger Band, like the higher one, they'll keep going till they hit the lower one and vice versa. So that's also interesting. But yeah, just change your Bollinger Band settings. We've pre-coded ours, but if you go into the standard deviations, change it from 2 to 3. It'll get you a better result. Anyway, on Ethereum here, if it can break out above this cup and handle, have an alert, then sure. I have an ETH whale friend. He said his whale friends in Bitcoin are selling Bitcoin and buying ETH. Not really seeing it yet, but we'll see, I guess. I just a lot of sell pressure here, and we didn't really talk about total market cap, and I wanted to. Total market cap not looking too bad, and same thing, cup and handle here, a little bit of a bull flag, and the measured move on the bull flag puts us either at 4.9 trillion or around 6 trillion. That'd be great, and get into price discovery. But we have a big block of sellers across the board, and of course, total market cap includes Bitcoin, Ethereum, and the alts. If we go to total 2, though, it's worse. Lots of red, symmetrical wedge, and a lot of that's Ethereum, because if we go to total 3, it's not as bad. So I don't know, you guys. It's just we'll have to see. Either way, we'll probably get there. Lots of sales resistance at these levels. Once we get the price discovery, it's off to the races, and just have to wait and see. I'm a big fan of Solana, but again, this chart here not looking so good. Downtrending channel, sell block. I don't know. I did double my Solana and my IRA just trading out of the 125 region last year, buying in. There was a big buy block in here. So from this level, if we get down around the 130 area, I think that would be a great time to buy some Solana on a bounce. If we lose that down to 100 zone, and but I don't know that we go that low. Just a couple alts I like at long-term lows, not financial advice, just some cool charts here. And some of our members we like these. So long-term support, rising support, ICP, wasn't a huge fan of what it is, but I like the chart. And another cool one, Filecoin, competes with AWS and multi-year low on that. So I'm looking for these 45x's, 10x's, etc. And then there's a bunch of these others you guys have probably heard of, but the charts aren't looking really good. It's kind of waiting for some strength to come back. Probably Bitcoin leads, and then we go up from there. But that's about it, and yeah, that's all I got, you guys. It's been fun, and thanks again to Cam letting me jump on with you guys. A huge fan of the show, and so it's a privilege, and it was a lot of fun.
Thank you for being here. Before you go, have you got time to share a Bitcoin dominance chart? I'd love to get your thoughts on that, actually.
Yeah, and I had it in my outline, and I just skipped over it. So do you want to talk about that, or
All I want to do, I'll say a quick piece, and then I'll get your opinion. I think for a long time I've been hearing this thing's going to break down, this thing's going to break down, and I look at two factors essentially. Well, actually, look at more than that, but I look at number one, the trend to me looks very strong right now. Number two, I think the sentiment doesn't align for this thing to reverse immediately. I think too many people are cheering it on, and I think the market needs people to kind of capitulate on that idea a bit first before it's got a chance of rolling over. And then I've also been talking about other ideas, such as the fact that a lot of the Bitcoin is kind of tied up in corporate treasuries, and therefore it is not going to rotate into altcoins this time around. A lot of the ETF Bitcoin is likely not going to rotate this time around. And then you've got the dilution in the altcoin space because there's millions and millions and millions of them now. So there's just not enough capital in the world to pump every single one of them by 100x, obviously. So anyway, with all that said, my thoughts are that this is still a very powerful uptrend for Bitcoin dominance that will likely persist for a little while longer at least. So do you agree with that, or are you more on the side of the argument where this thing is at an imminent top and reversal? Do you think this thing is going to break down any day now? And I would also like to get your opinion on whether you think the breakdown will be strong towards the lows, or whether you think maybe we can just kind of trade sideways here in a, I don't know, 10 or 15% range for a little bit.
Good question. Really hard to say. The trend is your friend. It's in a nice uptrend along the moving averages, but this zone up here, and when I turn on these order block, where the order block detectors are on, there was a big red zone up in there previously. These arrows, I had drawn a study with something else, and I forget what it was. I think it was our RSI, but this zone is a bit of resistance. Can we get to 70%? I mean, and these are all ifs that we've covered already. If M2 is going to lead, if we're going to get a big push, if those other factors are going to push Bitcoin dominance, I'm not seeing a lot of strength in the altcoins. And so my guess is that we will push up. Do we hit 70? I don't know. We haven't even hit 66.4, which is kind of this level, but I think probably we will. and that's just a bit of spidey sense, but it's also not a high confidence. I think if we did, though, then we'd get that push into those levels that we're shooting for, 150K, maybe 250K comes later, even after it rolls over, but then maybe we get an alt season after all. But I don't know. That's a tough question.
What about it breaking down? Do you think the breakdown will be violent and spectacular and all the way back to the lows, or do you think maybe it will be a little lackluster this time around?
I haven't really given that a lot of thought, but I think because there's so much institutional money driving this market, retail is largely, I wouldn't say left, but they got beat up so badly with the meme coin mania and the pump fund. They're not holding this market up. And so Bitcoin dominance is going to continue to be led, I think, by Michael Saylor, Strategy, BlackRock, and these other companies, even though they're buying over the counter, like you were saying, the spot supply is running out. And so the money, I think the smart trade is Bitcoin runs first, and then they start dumping it. And but your question about does it dump hard because they're dumping into alts? I don't know. I think they're, the institutions, etc. They can't really buy alts. A lot of the bigger companies that are buying MicroStrategy and IBIT because it's public company and regulated. So I don't think my guess is we won't. It'll be more orderly for those reasons. But I reserve the right to be wrong, as always.
Awesome. Well, thank you very much for being here. Really appreciate your time. I had a blast. This was really interesting. Do you want to, I'll put all the links to your stuff in the description and pin comment, but do you want to let people know where they can find you and that kind of thing?
Yeah, sure. I mean, we're at Moonstream Crypto over on YouTube and doing more and more of these kind of things, and website moonstream.io, and we'll have some things there. And if we see any orders come through, we'll send Camel rum in exchange for the mentioned.
Awesome. Well, thanks again for being here, and yeah, hopefully we can do this again sometime.
Yeah, love to. Appreciate it. Thanks so much.
Okay, all the best. Take care. Cheers. Bye.
Camel Finance, he's the man to see, rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame, sticking to his guns in his money game. He's a badass, oh yes indeed. Camel